Good morning, fellow traders. Welcome back to my channel, Forex Flossing, where you find quick, simple explanations for Forex concepts. Today is July the 27th. This is New York session. We got some USD news in 30 minutes. High impact. Durable good orders. Okay. We got some high impact news. So we need to be careful around USD pairs. But you know, I'm always going to trade GJ. So although the dollar affects everybody's currency. Let's see what Forex Factory has to say. Oh, Forex Factory. Why my computer going so slow? I do want to bring to your attention, traders, my FX book has such an incredible, just like consortium of information on this website. They have a heat map. And I really like this heat map because it shows me where the bulk of our fellow traders, our trading, and they do it fractally. So I like to trade off of the 1 hour and the 4 hour. It looks as though people are jumping ship from gold, from buying gold, and they're looking to sell gold now. And I imagine that's because of the USD news that we just saw on the Impact News drop down, the economic calendar. It's interesting how Forex Factory isn't listing any USD news, and the USD news it is listing is this orange folder. So I don't know what. I'm about to stop with Forex Factory because I don't know. They're just not as thorough. Anyway, we're not complaining. So yeah, I just wanted to show you that heat map. Once again, my FX book hit market, dropped down the heat map. I changed mine to I like the percentage. And it shows you dark red is like strong sales, dark green is strong buys. It's interesting. Now wait, no, maybe I had it wrong the first time. I think I had it in pips before. Okay. Yeah, okay, so this means that the people who are in sales on the 30 and the 1 hour are have a negative 460 pips. Got it. And so, for example, if you're in a buy in EuroCAD, you should be up. I believe since the daily open, you should be up about 30-40 pips. We're getting ready to look at GJ. Because I'm already in GJ. Y'all know me. Okay, so I'm going to strip all my indicators off because I want to do my due diligence because we're not going to be on here very long. I want to show you guys, I want to continue to review the strategy. Okay. So this is just a naked chart right now, right? And today is Monday. So we're going to add the sweet spot. Again, the sweet spot indicator shows us the institutional levels where the banks trade. It's typically whole number values, right? If you check out my previous video or 2 videos back that I posted, I showed you where if you trade off of MetaTrader 4, I showed you where you could download that indicator. So here is our sweet spot indicator. We can see here for Monday. Hold on, let me just download the weekly open as well, just for reference. Daily, weekly open. I always drag and drop. Press OK. So our weekly open was at this level, 135.5890. Price did some bouncing. I want to emphasize, people, when the week opens, always monitor closely where the first 50 pip move happens. How is the first 50 pip move happening? For today, this was the open. Price went up 25 pips. Price then came down. $64 pips. Right? But if you consider it from the open, that's just another. I wouldn't include wicks, because wicks are typically your broker manipulating price action. So it's another 38 pips. So price was kind of all over the place, but you want to kind of gauge what the first 50 pips is doing, because it's going to tell you a story. This is just a really crazy way. What price did, and I'm now scaling up to the 1 hour, is it retraced this move here, because it's creating a W, so to speak. It's creating this retracement. It didn't quite make this level, this 135. So in essence, it rejected this area, and it rejected around 135.250. Right? So you can back test this. Every Monday, if you look at where the open is and you look at the first 50 pip move, the first 50 pip move was up 50 pips, back down 50 pips. It bounced off of that weekly open, and then we just kept going up. Always monitor the first 50 pip move of the week. It will tell you a story. It will either retrace Friday's move, try to retrace and retest the zone that it was just at, or it will do something different, but it will always tell you a story, and 9 times out of 10 is forming some type of M or W that will lead to an impulsive move up or down. We will continue to discuss this in our series, but I just definitely wanted you to earmark that at this time. So, we see price came down here. It rejected this 135.20 area. I also like to go on TradingView because TradingView shows me a 12-hour snapshot of my pairs. For some reason, I can't figure out. I don't even know if I can change the time frames on MetaTrader 4. It doesn't matter. That's why we have TradingView. TradingView shows me that for the last 4 12-hour candles, this whole area has been rejected. So for 48 hours, this area has been rejected. This baby's going up. Now, how far it's going up, I'm not sure. I honestly believe GJ is going up pretty high because it's going to retest some weekly levels. But we're going to take it one step at a time. I believe GJ's going up at least to the next institutional level. That institutional level being 136. I have a indicator that provides me with the average daily high, and that high is at 136.56. So let's scale down to the 15-minute time frame. We have this impulsive move up. Now that we have identified what direction our pair is going in, even though this looks a mess, this looks like a choppy mess, it's still going in a direction. So now that we have identified that direction, we take the low of the day, we take our Fibonacci, we start at the low of the day, and we go to the highest point of our impulsive move. It's not the high of the day, it's just the highest point of the move from the low of the day, right? And we're on our 5-minute time frame. So the move already happened. It may come back down to retrace. I'm not sure. But what we're looking to do is, since we identified our direction as going up, again, we saw on TradingView, we have 48 hours of rejection in this zone. So we know price wants to continue to go up, right? So on what we would do on our 5-minute time frame, from the low of the day to the high, from that impulsive move at 8 o'clock, at 8 a.m., this is the key time, we would look for a retracement to the 50% retracement line, and it may be coming down again. And we would get in. So I got in right here. This may be coming back down to retest this area. But I got in right here. And where we are going to buy this pair up to is the negative 27. that's not to say that it won't exceed that. It's just to say that that is the move that we would seek to make, because that's kind of like the rule almost. If once we identify the direction of the pair and we see the impulsive move up on the 5-minute, identify the retracement back down to the 50 line, we can then from there buy up to the negative 2.7 and then get out. And that is a nice about 38 pips. So just to review, number one, it's important to identify the first 50 pip move of the trading week. Why? Because it will tell us a story, and oftentimes it's forming an M or a W that will eventually lead to an impulsive move up or down, or even a consolidation. Number two, we are looking to identify the direction of the trade by scaling up to higher time frames. As we saw on TradingView, we saw a clear rejection of this zone around this area. And so with that information, we knew that it would be safe to buy. And so now that we know that it's safe to buy, we scale down to the 5-minute time frame. We take our Fibonacci tool. We identify the low of the day and the impulsive move up from the low of the day, which may not necessarily be the high of the day. And from there, we look at entry points at the 50 line, 50% retracement line, or even the 61 retracement line. But or even the 3/8. I like to get in around the 50, and sometimes it will even extend to the 61. And from there, we would buy, since we have identified our direction as a buy, we will buy up to the negative 2.7 extension. And that could yield us between 30 to 50 pips. And depending on your lot size and your account size, that's good enough. That's some good money. And we could end the trading day on that note. Now, I will tell you, this may take the rest of the trading day to complete. It may even go into tomorrow's trading day. You have to, Forex is patience. You have to be patient. We set our stop loss for the 135.250 zone. I do not believe that price is going back in that direction. Again, we saw all of those wick rejections on the 12-hour. So price is just gonna continue to bounce around, but it will eventually, hopefully, lead us to our target. But if it doesn't, we have our stop loss, we have about a 1 to 2 risk reward ratio. So I think I feel pretty confident. My confidence is at 100 for this this trade, and I'm going to end the video there. Hopefully you found this information useful. Please like, share, subscribe, comment, and I will see you on the next video. Bye-bye.